Hi there, this is the thing about Grab. The market cap right now is about $20 billion and the price $4.90. Now, to invest in this company, you have to know whether it's undervalued or overvalued. They can deliver you a nice return over the next 10 years, 5 to 10 years, more than 10%, or depends on the return you want. Now, at the current market cap of 20 billion, their earnings have to grow by about 40% over the next 10 years, so that get a return around 10% a year by year, over the next 10 years. So the earnings have to reach about 1.6 billion to justify the current market cap. Now, they also have some cash and investments here, about 5.8 billion, and if you also add these investments, then the market cap may be cheap, as long as they keep growing by 40% a year. But be aware, they are in the early stages. They have to invest in their business, and I wouldn't rely on their cash, even if they're about 5.8 billion cash plus investments. Now, the question you should ask is if they can grow by 30%, to increase their earnings by 30% over the next 10 years. And to do that, you have to understand how their business operates, right? What do? They offer ride-hailing, food delivery, and financial services, such as lending. They have their own system, GrabPay, insurance, and wealth management. Most of the money, the current revenue, comes from ride-hailing and food delivery. And you have to think about their business like they have their gross merchandise value here, which now is about, for the last year, 2024, was about 18 billion. And based on this gross merchandise value, they charge a fee, which is about 15%. By the way, here I also included their financial services, because the revenue comes from those two main segments plus financial services. So their total take rate is about 15%. And now you look at the past. What happened? Revenue increased from 1.4 billion to 2.8 billion for the last year, 2024. Earnings, a loss of 1.6 billion. Now they have reduced their losses to 100 million. This is quite a huge improvement. And surprise, for 2025, they expect to report positive earnings, over 100 million in earnings. So that's great. And the revenue for 2025 is expected to increase to 3.3 billion. Now, those are two important indicators. If you look at the total rate, if you look at the total take rate over the years, 15%, 50%, 11%. If they can maintain this total take rate about 10%, but even if it goes down, if the increase in the gross merchandise value is higher than the total take rate, the decline in the total take rate, that will be a plus for Grab. So this is the most important indicator, gross merchandise value. And to assess whether this company, Grab, can reach 1.6 billion in earnings, and this may be possible because the revenue is quite small, 3.3 billion, and this is possible, but you have to know that the margins will be low. Look, 3.3 billion, only 120 million for 2025. Maybe they can achieve some efficiency in their operations and they increase their margins. But for the moment, the margins are low. 2025, the expectations. If they, for instance, make 16 billion in revenue and the margins are about 10%, so 16 billion, and that would be great. They can achieve this earnings, 1.6 billion. Now, how can you value if Grab can deliver 1.6 billion in earnings, or the revenue to increase to 16 billion? Well, you look at this important indicator, gross merchandise volume, see how much it can grow in the future. So from 18.8 billion, the analysts, the market expects to increase to 23.5 billion by 2026. And then you have to look at the total addressable market for Grab, which now is about 375 billion. So be aware of this, 375 billion. So on this time, they will charge their take rate about 15%, let's say 10%. If they charge a take rate of about 10%, then they can make 37 billion in revenue, right? If they make 37 billion revenue, then for sure they'll be able to make some more. Because 37 billion is higher than 16 billion required to make 1.6 billion if their net margins are about 10%. But be aware, they are not alone. They also have competition. So from this market, you know that you have more competitors, 1, 2, 3, 4, 5. And you also have to know that for the moment, from this time, only 8% is online, where Grab operates. So for the moment, the current total addressable market is quite small, 8% is online services. They offer ride hailing and food delivery is only 8%. So there is a huge opportunity for this market, online food delivery, online ride hailing. And you also have to know that from this 8% online market, Grab owns 55% of the market share. So it seems that Grab is leading for the moment. They are the leader in this market. If they can maintain this market share above 50%, then for 47 billion, as long as this online market grows, and for sure it will grow in the future, they'll make more than 15 billion, which means they can achieve 16 billion revenue. Maybe they can make 1.6 billion in earnings. So based on this total addressable market, yes, it's possible to have a return about 10% a year from the current level. But only if this market share, online market share, increases more in the future from 8% to 100%, need that, and they also maintain their market share above 55%. And here is the thing, I don't think that Grab will be able to maintain this high market share above 55% because they will have more competitors. Let's reduce it to 15%. This is much more achievable, 15%. Of course, if you believe they have an advantage, for sure they have an advantage. They develop their own financial system, GrabPay, that's a plus. But you have to be careful because this market share, high market share, won't be sustainable in the long term over the next 5 to 10 years. Maybe 20, 30%. And then from this total addressable market, be aware this is only for gross merchandise value, ride hailing, and food delivery. They also offer financial services here, where they offer their lending services, loans. And here the market for the moment is about 90 billion. Is expected to increase to 300 billion by 2030. There are many people unbanked in Southeast Asia. So this is a great opportunity for Grab. And you also have to ask yourself how much you can take from this market share. 10%, 20%, 30%. You have to think about here how they are going to grow more in the future. For the moment, they offer those lending products. They have some loans. Yes, they offer the loans. They can grow a lot. But you also have to be very careful because on these loans, it's easy to grow, but you have to look at the loss ratio. For the moment, last quarter has improved, but you have to be aware of their loss ratio. So, as I said, it is achievable to make 1.6 billion in earnings over the next 5 to 10 years, but the big question mark I have for this company, Grab, is the competition. It's hard to maintain this market share above 55%. I mean, ask yourself, what's their edge, their advantage? Can other companies do the same thing to offer financial services, loan, insurance, lending, management? Of course, yes. If you look out there, you'll find out many companies that offer financial services, especially right now. And for ride-hailing and food delivery, of course, you will see more competitors, especially as this market share of 8% online from this total addressable market. As long as this grows more, let's say to 50%, then for sure, this industry will attract more competitors. And then Grab will face competition. The market share may decline. And even if the market share doesn't decline, if they face more competition, guess what will happen to their fees? They'll be forced to lower their fees so that they can maintain competitive. And if this happens, they lower the fee, you have less in revenue, won't increase that much, and so in the earnings. So it's a risky investment. Yes, it's possible they continue to grow. They might deliver 10% a year. But at the current market cap of 20 billion, it's hard. It's hard to predict their future that they'll make 1.6 billion in earnings. Of course, if you believe that, go ahead and invest in Grab. But if you pay attention to the risk, the most important thing, you might want to find better investment ideas. And for me, Grab is not a buy for the moment. In my portfolio, I have better investment ideas. High returns, low risk. And if you are interested, go to my profile and press join. And more recently, I bought a company from the US, where the return is more than a double in 1 year, maybe less than 1 year. And the risk is quite low. 1 year. So if you want to make more money, better investment ideas, go to my profile and press join. And if you have other investment ideas about Grab, let me know in the comments.